The second day of Donald Trump's second presidency concluded with the announcement of the Stargate Project. The initiative will involve American companies OpenAI and Oracle, Japan's SoftBank and AMAGX, the state investor from the United Arab Emirates, Microsoft, the largest investor in OpenAI, along with the chip manufacturers ARM Holdings and Nvidia, will serve as the project's technological partners. The primary goal of Stargate is to establish a network of data centers for OpenAI across the US. The project aims to solidify America's leadership over China in the race to develop artificial intelligence. While markets in Japan and Taiwan are gaining ground amid these years, things are looking increasingly bleak in Beijing. On a Tuesday evening, Donald Trump announced that his administration is considering a 10% tariff on China's imports starting from February 1st, though it's much lower than the originally proposed 60%. Trump could always change his mind. Incidentally, he has also proposed that the Chinese-owned social media giant TikTok transfer at least 50% of its shares to the United States. No doubt the American president is prioritizing national security. However, considering that TikTok is the most popular online platform globally with 170 million American users, Trump's words on this matter carry weight. They treat us very, very badly. They don't buy our cars. They don't buy our agricultural products. In fact, they don't buy much of anything, so they'll have to pay tariffs. These are not Trump's threats to China, but rather his gremlins against the European Union. Under his America First agenda, both France and both find themselves in the crosshairs. The primary weapon in this campaign is the US dollar, which has already logged a 7% rally since last September. Today, the $6 currency index is trading higher, fluctuating between 107.90 and 108.20. The ongoing noise about tariffs is likely to ensure further strengthening of the greenback. The possibility that tariffs might be delayed only gives markets temporary relief. Any policy direction under Donald Trump tends to be inflationary, forcing the Fed Reserve to meet an April-launched pause. Meanwhile, most experts predict that the ECB will cut its refinancing rate possibly as early as next week. And this makes it much harder to predict the ECB's next moves, especially with the inflation still elevated across the Eurozone. Currently, market counterparts suggest 4 rate cuts this year, reducing the Eurozone's key interest rate to 2%. Thus, at first glance, the euro seems destined for the further weakness against the US dollar. But here is the question: could Donald Trump's plans, which he announced in advance, already be priced into the US dollar? If so, today's gains in the euro-dollar pair within the range of 1.0398 to 1.0454 might take in perspective. Fears of looming trade tariffs have already been priced in, and the absence of further developments on the matter acts as a tailwind for the euro's growth. However, things can change rapidly, and the euro-dollar pair might test the technical support level at 1.0155, followed by a rebound towards 1.0485. Hints of a bullish impulse emerged, for instance, today, when the instrument surged briskly to 1.0450. In a case of a resumed bearish trend, a breach of the key support at 1.0025 would negate the upward movement, likely leading to further declines towards parity at potentially to the technical level of 0.9745. Meanwhile, oil prices are following only one direction for now: downward. The proposed US trade tariffs are expected to hit China, the largest crude oil buyer. At the same time, under the executive order by Donald Trump, the US plans to ramp up oil production and replenish its strategic petroleum reserve. Following this news, Brent crude prices dropped by almost 1% on a Tuesday. However, Brent crude opened today in the green within the range of $78.80 to $79.90 per barrel. This temporary rebound was partly due to the snowstorm that struck the US Gulf Coast on a Tuesday, which, according to authorities, caused a production cut of 130,000 and 160,000 barrels per day. Besides, the rise in oil prices is partly supported by Western sanctions against Russia. The Russian ruble also managed to strengthen midweek. Today, the dollar-ruble pair is trading below 100 within the range of 96.5 to 99.70. Alongside oil prices, several other factors worked in favor of the Russian currency. For example, exporters increased their sales of a foreign currency ahead of the tax payment period. Additionally, demand for the ruble rose amid prospects for reduced geopolitical tensions. Seasonal factors also played a role, as the demand for foreign currency from importers is traditionally low in the first quarter. However, the ruble's bullish momentum looks limited in the medium term, mainly due to the persistent decline in goods exports to Russia. Excuse me. So that's all for today. We continue to follow developments in the financial markets. Subscribe to the channel and follow news with us. See you soon.